Hello everyone, it's Evan here from the Trade Risk, and this is your stock market weekly update for Friday, December 1st, 2023. Let's get right into it. Hope everybody's doing well out there. It has been a monster sort of finish here, rally to the end of the year. Of course, we still have about 4 weeks of trading left, but November gains were nothing short of spectacular, breaking a lot of records, certainly in one of the best months for markets, flat out period. We're going to look at that in just a little bit. We had the Russell 2000 this week playing some catch up. This is something we've been wanting for, waiting for, is for that breadth expansion, some of that maybe rotation out of the 7, 10, 15 stocks that have been moving this market up all year long, to get some of that capital flowing back into the smaller cap stocks, and we're starting to see that take place. Meanwhile, we've got 10-year Treasury yields back below 4.25. Again, about a month ago, everyone's eyes were set on 5% or higher, and now it's the complete 180, and 4% is now in the cards. Gold, silver, Bitcoin, all off to the races. Natural gas is unfortunately one of the few kind of standalone, unloved areas of the market. So we got plenty to talk about today. Stick around with some charts here in just a second. All right, let's get into it here. We're going to be using Warden TC2000 as our charting platform throughout this episode. And as a reminder, if you are a TC2000 user or thinking of becoming one, we're experts on the platform, and we can help you really sort of customize or build pretty much anything you're looking for within, of course, the platform limitations for TC2000. So check out our website, TradeRisk, thetraderisk.com, and see what we have available for UTC 2000 users. Let's get into it here for the numbers this week. As we talked about, just really finishing off the month very strong. Everything positive across the board. Dow Jones and the Russell 2000 really sort of taking the lead into the month end, I should say, not year end, not quite yet, but the month end was almost 3% for both of those indices. You can finally see that the Nasdaq's taking a breather, and oh, look at this, over the last 1 month, we now have the Russell 2000, which is leading here in terms of performance. Of course, you know, over the last 1 year, it has been the laggard. So it seems to be playing some catch up here, as we mentioned at the top of the show. Volatility continues to basically stay pretty much flat here. So for Nasdaq vol up in the mid-teens here, 16.28. The VIX at 12.63. Let's move into sectors this week. On the week, best performing was real estate, up 4.65%, really coming alive here. It's putting together a very strong last 4 weeks of trading, up 14% for the XLRE. Second spot was materials, and then industrials. This is kind of a curious bunch here. This hasn't really been the composition of leading sectors in this market rally throughout really any of this year, but it's starting to now take form here, and this is why you're starting to see some of the Russell 2000 start to take the lead. Communication services were the only sector in the red today, down 1.5%, followed by energy and healthcare. If we take a look at our smart trend filter, so this is a custom indicator that we've built for TC2000. It so happens to also be available for TradingView users, but this measures price and volume spanning across time. There's some price action relationships and a little bit of other kind of smoothing magic that's happening behind the scenes, but really just helps us determine and visually see path of least resistance. And you can see that pretty much in all sectors now, except for the energy XLE ETF. We are in a clear defined daily uptrend, and you can see that just by the green dots that are printed here. Now, this is of course kind of fractal, so you can look across different time frames. If I throw this on a weekly chart, this is now a weekly trend analysis here of the sectors. And again, you can see for the most part pretty constructive. However, biotech, you can see on the longer term trend, hasn't quite turned the corner. Healthcare is trying to turn the corner right now. Same thing with utilities. So you do have more of a mixed picture structure here when you go from that longer term extended time frame. But generally speaking, most things are curling up or already in the process of an established uptrend. Now, if we take a look at market breadth here, kind of on a similar picture, Thursday and Friday of this week, we are finally seeing an expansion here of stocks hitting 52-week highs. I think this is notable, something we've been certainly talking about and kind of waiting for and hoping for in terms of just a quality stock market rally. It's just, history shows that it's not ideal when you just have a handful of stocks leading the market up. You like that kind of broad-based participation to show that capital, broadly speaking, is moving into equities as an overall asset class. And we're starting to now see this come alive here. We got 500, over 550. Again, let's not hang up on the number too much because this is kind of TC 2000 specific on how they're recording this. I mean, it should be roughly speaking approximate, but different data sources are going to have different numbers here. And we're getting that expansion up, and I think that is a good thing. Meanwhile, on the downside, stocks hitting 52-week lows is just stagnating and they're drying up here. You can see that we're probably lifting kind of the tide on the bottom of some of the stocks that were just beaten up the most or just really in steep downtrends, finally starting to get some life in them, generally speaking, as well. If we take a look here at the percentage of stocks over 200 SMA, you can see we're going quite vertical here, and we're going from really the bottom percentile from less than 20% of stocks above their 200 SMA all the way up to about 67% going into the weekend here. So we were up here back at the beginning of the year in January. We're up around the 70% mark. So let's see if we can kind of break above it and move to, really north of 75%. That tends to be when you get these very protracted longer term uptrends that get set into motion, is when you really get that good breadth thrust on this long-term 200 SMA over 75%. So we'll see if we get it this time around. You can see that the 50 SMA is in pretty, kind of nosebleed levels up here. So we're already up at around 83% of stocks in the New York Stock Exchange trading above their 50 SMA. So we are definitely, kind of hot in the shorter term as we have recovered from the bottom end again to the top end here. Very much what classic technicians would call a breadth thrust, when you just get that sharp kind of V-shaped move from very oversold conditions, very sort of dire conditions, going all the way up into quote unquote the euphoria sort of stage. And that can really be significant kind of short to medium to longer term bottoms get put in place when you start to see moves like this. So this is all fairly encouraging action. Again, it does not speak to the very short term. We can, of course, trade down for a few days or even a week or two, right, as we kind of work off some froth. But I think longer term, you want to see these bigger moving averages. You want to see stocks just continue to improve in their technical structure, and you're getting that this week. So if we move on to IBD's list, so shout out to IBD. They are a sponsor of the show. They help make the show possible. This is their IBD 50 list. This is the top 10 stocks on their list. There's been a handful of additions here, about half the names I recognize from last week or the week before, but there's a couple of new additions here. You can see, generally speaking, pretty good performance here for IBD 50's top 10, including, some 26% gain out of Samsara here, IoT. So good list there. Check out the link in the description to get access to this full list of stocks curated for you every single week, along with some other goodies. Now, moving on to commodities and the dollar. If we take a look here, we got gold and silver at the top of the list. A few weeks ago, we talked about this bigger term structure here on some of these metals. We're going to look at it in just a moment in the charts, but we're seeing some nice moves here taking place in gold, silver, copper, Bitcoin, as we talked about at the top of the show as well. The only thing that's really just not participating now is natural gas. This is continuing to unwind, hit new cycle lows. It's down 25% over the past month. It's down 74% over the past 1 year. Now, I'm looking at the UNG ETF, so there is some decay here. This is not the spot commodity futures contract, but still this has been just really in some difficult waters here for natural gas. Last but not least, if we take a look at Treasury yields, I mean, you may not have to overthink this market. If you say, why is the market rallying? Why are things so good all of a sudden in this past month? And largely, I would say it's these charts right here. This is Treasury yields and really showing sort of the topping pattern that took place in middle October and sort of rolled over into November. And as all of these sort of yields rolled over, started to break trend and continue to make new cycle lows, the market is loving it, right? And so, of course, Powell on Friday was out trying to sort of talk the market back down, trying to say, well, maybe this is premature on the you know, the expectations here of rates topping out, but clearly, you know, the market is saying something different here. So if you know, you think that the market's getting ahead of itself here, then I guess you've got a good contrarian setup, and you've got some maybe pain for equities in the future. If you think this is premature and we are in fact going to put in some type of structural higher low here, and we will see. But for now, the music is still moving to the downside here, and equity markets are enjoying it. So let's get into some of the price action now, some of the specific charts here. We're going to start with the S&P 500 as we always do. So weekly time frame. So each bar represents 1 week of trading. And again, you can see we just have this beautiful, just perfectly bullish kind of pattern here. You've got this big kind of large range expansion bar that took place on heavier volume that really kicked off this move back over into 4,300, recovered a lot of technical damage here, and then that just set in motion this chase that we've seen over the past 4 weeks. We've been higher now for 5 weeks in a row, and here we are knocking on this 4,600 door. It's kind of what we've been saying is the path of least resistance and most likely outcome for the S&P 500 throughout this whole rally, frankly, or the last couple weeks, let's say. I mean, the call has been getting easier to make, but it just seemed that this was too neat and organized here for the S&P 500 not to get back up and retest these July highs. And here we are. We're basically there. We didn't quite take them out yet, but we had a nice rally on Friday. We're just about, you know, a tenth to 22, you know, 0.2% away from taking out and making new cycle highs. Note these are the July highs. These aren't the all-time highs. So the all-time highs are way back here in late 2021, up around 4,800. So if we were to get up there, let's see if I can make this a little bit bigger. If we were to get back up to the prior all-time highs, you're looking at about another 4.5% in the S&P 500 from current levels, which you know, look, 4 weeks from now certainly seems doable by year end. I'm not saying we have to get there, but I think the tell next week will be how we act around this cycle highs here for July. Can the market break out over 4,600? Does it have enough energy still left in the tank? It's covered a lot of ground in a very short amount of time. You can see it's up around 11.5, almost 12% in almost the month of November alone. And you can see that we've got a couple of things that just show the urgency here. We've talked about them in the recent videos, but you've got just these open gaps that have not got filled. So the market gaps up to start the day and then just charges higher throughout the session. We've got 3 of them stacked in here with no real good attempt to fill them. And you'll notice that the digestion that we had really this week and late last week, and of course we had some holiday trading in here, but this was the digestion that the market, you know, basically spent. It was sideways through time. We weren't even able to sort of reject prices or pull back in some type of, you know, meaningful way. The only thing that kind of happened here was volume dried up, we went sideways, and now it looks like we're starting to move up again. So this is really some just textbook bullish action here. Seems like the chase just continues to be on. It was a very fast V shape here. I think a lot of disbelievers, I think, you know, money market funds at 5%. I think there's just a lot of effects here that psychologically are keeping people either sidelined or sort of not believing in this rally. And maybe, you know, it all turns out for good reason, and those are the smart folks. But for now, the market is, the train has left the station, let's say, and is coming into resistance. Obviously now, not the easiest chase here. If you haven't been, you know, participating throughout this whole spot and you're choosing to, you know, buy in tomorrow or Monday, you know, that's certainly a little bit dicier. The risk reward is slightly skewed, but of course, you know, momentum continues to ratchet itself higher. So for me, I'm going to be looking at this 4,600 area on Monday, watching closely to see how the market reacts at the old July highs. If we start to push through there, if the market starts to accept that, then it looks like 4,730 is the next big meaningful kind of stop before we get back up to those all-time highs. So I'll drag these old levels on here, and we'll continue to monitor this in the coming weeks. So So S&P 500 continues to look quite strong. The Qs, you can see really taking its time now above the July highs. So this is kind of what I mean here is price has memory. And when you get back up to these significant levels, you can see the Qs, or really last week, or almost 2 weeks ago, was punching through its July highs, but notice it's kind of been spinning its wheels sideways here. So it hasn't quite got the energy built up to push and extend itself up. It's consolidating right at these July highs. And look, I mean, if you want to be contrarian on this market, if you think it's gone too far too fast, watch the Qs, watch for a breakdown of this area. If we reject here, if we come in and gap down and we start seeing some heavier volume and a move back down below the July highs, I think you have a tactical, short trade you could put on there if that's your cup of tea. But right now, it just looks like we're consolidating above former resistance. And this, to me, looks more optimistic, looks more of a bullish consolidation than anything else. So we'll need to see. But for now, the Qs, again, momentum's holding. Keep an eye on 286. If we start losing the July highs and we start losing this shelf of consolidation, then if you're bearish here, you got a shot on the short side. So keep an eye out on that. Russell 2000, again, I think this is the story. We talked about this in the past couple of weeks here. We've got the new series of higher highs, higher lows. This roadmap's been in place, and look at this bar on Friday, 2.92% up day for the Russell 2000. Increase in volume. You're starting to see that breadth expansion moving back to the top end of the range. Once again, time frame is everything. So if you want to throw on a weekly chart, right, a monthly chart, we are still very much sideways in kind of a choppy 2-year long range. So we haven't quite done any different structural kind of movement here, but the chase is certainly on in the short term as buyers drive prices back up into the middle of this old range. Good momentum, good thrust here. It looks like a little bit of a chase that can carry us higher into the 190s into next week. So good move there. I also wanted to show, again, we should have done this at the top of the video, but if I throw on my rolling returns layout, which is available for download on TC2000 users. Let's take a look. I don't know how TLT got up here. If we go back to the Russell 2000, or actually, let's just go to the S&P 500. And I got a monthly chart showing here. So if I go to the bottom end, this is the returns for last month was over 9% for the S&P 500. So if I put a line on this 9%, okay, and I zoom out going back all the way to 1988 for the S&P 500, there hasn't been that many months that have seen a 9% push to the upside. So this is really, over the last multiple decades, this is one of the best months that we've seen for performance. Of course, this big spike here was immediately following COVID. So this was kind of this bear market kind of rally that we saw. And then back here was 2011. So, and then the other biggest was right around 2009. So when you start to look at some of those years where, you almost had a kind of a meaningful bottom when you got such a big move for the S&P 500. You can look at the Nasdaq 100 as well. So if you do this, this clearly has some little bit of a different story here, but the Nasdaq 100 was up almost 10.5, 11%. You can see back in the 2000s, there's a lot of wild months going on here. This is the big, infamous tech bubble throughout 1990 to 2002. So there's a lot going on there in terms of bigger magnitudes. But if you go to the past decade or two, it's still, again, one of the top performing months for even the Nasdaq 100. So very impressive stat there for November. And with that, let's get into some specific charts here. I want to go to gold next. And so gold, we talked about this a few videos ago. I can't recall exactly, but this weekly pattern for gold, or even the monthly pattern, if we really want to clean things up quite a bit, this is, again, looking pretty constructive here. In fact, if we closed December where we are, we're going to have, oh, actually, I don't even have to say that. November closed the highest monthly close. I thought November missed it, but we didn't miss it. So November, we had the highest monthly close for GLD in its history. Very impressive. December clearly is only a day in, but starting to continue on that progress. So gold is getting some pretty significant breakouts happening here. And same thing with silver. If we go to silver, structure here is quite different. It's not at all-time highs. That was way back in the 2010s. But the monthly chart for silver, we're at this, you might want to call it a neckline for you pattern traders, or you're looking at some type of inverted bottom here, or consolidation. But if we start punching through this 2350 area, could really see some strong momentum push back up into all the way up into the 27s here, going all the way back to 2020 when we had that I think this was right around this meme stock mania was silver in here, but 2750 or so, that was the high back in 2021. Regardless, both these metals looking very strong. Again, a little bit of a tough chase at the moment, but certainly seeing some good momentum. I want to talk about ARK as well. So ARK is kind of in here as similar to the Russell 2000, obviously different composition of stocks entirely, but this is, really getting some love here over the past month as well. It's up about 40%, their flagship ARKK ETF. A lot of these stocks, coming back to life here as interest rates come down. Some of these growth prospects, the companies that are maybe reinvesting all their cash, they're not quite profitable yet, continuing to get quite the strong bid going on here. And ARK has been arguably bottoming in a potential bottoming formation for the past year and a half. So it's another one to keep on the watch list, on the radar. Again, it's kind of looking similar, but clearly a different composition of stocks than the Russell 2000, which has also been in a potential bottoming consolidation pattern here for almost 2 years. So something to consider, but lots of those stocks continuing to work in this environment. Lastly, I want to talk about natural gas. Sadly, continues to break down here. Don't have a position, but really not seeing too much life. We talked about it last week as it was just starting to lose the bottom end of this range, and we just said let's keep an eye out for some type of fast rejection and push back up into the range. We didn't clearly get that. We're getting more of a continuation lower for natural gas. So this is clearly kind of standing alone seasonally here, working at new cycle lows. So that, I think, is just about everything I wanted to talk about. We'll go to our industry scanning list here. So this is one of our custom layouts here, which shows some of the sectors and industries that are notably making some moves on heavy volume or taking out resistance. So you can look through this, to pause on the video. You can look through some of these industries and sectors. Again, for you TC2000 users, this is available as a download on our website, and we'll leave it there. So thanks again for tuning into another episode of Stock Market Weekly. Let us know your thoughts in the comments section below. What do you think about this market rally? A little too long in the tooth, or do you think it has more legs into year end? Let us know your thoughts in the comment section below. Thanks as always for tuning in. Don't forget to check out the links in the description of this video for TC2000 products and our sponsor IBD. Take care, and we'll see you back here in the next episode.